Welcome back. The SEC is getting involved in these ICOs. New technologies and financial products, such as those associated with ICOs, can be used improperly to entice investors with the promise of high returns in a new investment space. So, the Investor Education and Advocacy office has put out this investor bulletin to make investors aware of potential risks of participating in ICOs specifically. So, what is an ICO, you might ask? Well, promoters may tell purchasers that the capital raised from the sales will be used to fund development of a digital platform, software, or other projects, and that the virtual tokens or coins may be used to access the platform, use the software, or otherwise participate in the project. Some promoters and initial sellers may lead buyers of the virtual coins or tokens to expect a return on their investment or to participate in a share of the returns provided by the project. After they are issued, the virtual coins or tokens may be resold to others in the secondary market on virtual currency exchanges or other platforms. So, what is a blockchain? It is an electronic distributed ledger, or a list of entries, much like a stock ledger, that is maintained by various participants in a network of computers. Blockchains use cryptography to process and verify transactions on the ledger, providing comfort to users and potential users of the blockchain that entries are secure. One of the most popular examples of the blockchain is Bitcoin. So, a virtual currency is a digital representation of value that can be digitally traded and functions as a medium of exchange, unit of account, or store value. Virtual tokens or coins may represent other rights as well. Accordingly, in certain cases, the tokens or coins will be securities and may not be lawfully sold without registration with the SEC or pursuant to an exemption from registration. A virtual currency exchange is a person or entity that exchanges virtual currency for fiat currency, funds, or other forms of virtual currency. Virtual currency exchanges typically charge fees for these services. Secondary market trading of virtual tokens or coins may also occur on an exchange. These exchanges may not be registered securities exchanges or alternative trading systems regulated under the federal securities laws. Accordingly, in purchasing and selling virtual coins and tokens, you may not have the same protections that would apply in the case of stocks listed on an exchange. Virtual tokens or coins may be issued by a virtual organization or other capital raising entity. A virtual organization is an organization embodied in computer code and executed on a distributed ledger or blockchain. The code, often called a smart contract, serves to automate certain functions of the organization, which may include the issuance of certain virtual coins or tokens. Some key points that the SEC would like you to consider when determining whether to participate in an ICO. And before investing in an ICO, ask whether the virtual tokens or coins are securities and whether the person selling them registered the offering with the SEC. Ask what your money will be used for and what rights the virtual coin or token provides you. Federal and state securities laws require investment professionals and their firms who offer, transact in, or advise on investments to be licensed or registered. Ask whether the blockchain is open and public, whether the code has been published, and whether there has been an independent cybersecurity audit. Fraudsters often use innovations in new technologies to perpetrate fraudulent investment schemes. They may entice investors by touting an ICO investment opportunity as a way to get into this cutting-edge space, promising or guaranteeing high investment returns. Investors should always be suspicious of jargon-laden pitches, hard sells, and promises of outsized returns. Also, it is relatively easy for anyone to use blockchain technology to create an ICO that looks impressive, even though it might actually be a scam. Virtual tokens or virtual currency may be stolen by hackers. Virtual currency exchanges and other entities holding virtual currencies, virtual tokens, or coins may be susceptible to fraud, technical glitches, hacks, or malware. You may have limited recovery options if this happens. Law enforcement officials may face particular challenges when investigating, such as tracing money working with entities overseas, no central authority, and officials having difficulty freezing or securing investor funds that are held in a virtual currency. Virtual currency wallets are encrypted, and unlike money held in a bank or brokerage account, virtual currencies may not be held by a third-party custodian. So here are some red flags that the SEC wants you to be aware of for fraud. Guaranteed high investment returns. Unsolicited offers, meaning you didn't ask for it and don't know the sender about an investment opportunity. Sounds too good to be true. Pressure to buy right now. Take your time researching an investment opportunity before handing over your money. Unlicensed sellers. No net worth or income requirements. Before making any investment, carefully read any materials you are given and verify the truth of every statement you are told about the investment.